This individual needs no alarm clock. He is wired, ready to go. He wakes up in the morning, he's ready to chase the fun of a unique type of investment. We'll dive into his wealth strategy as part of our Forbes BLK 50 list, building wealth through Wall Street. Hello everyone, I'm Jabbar Young here at the NASDAQ, a different part of the NASDAQ as we take place here right in front of the big board. Don't invest in none of these stocks. It might be old by the time you watch this video, but we're at the NASDAQ as part of our Forbes BLK 50 list, building wealth through Wall Street. And I am joined by Tracey Maitland. He is the founder and president of Advent Capital Management. And this is a great asset management company on Wall Street. And we're going to dive into all of that and more, talking how you built your wealth and, convertible bonds. I cannot wait to dive into this conversation. But first, let me ask you, what's 2024 been like for you, Mr. Maitland?
It's been an interesting year. We've had a capital markets that have really done very well this year. I think everyone's seen that equity markets have done well and the credit markets have done well. So net, it's been a positive year for capital markets, and so we're encouraged. Obviously, we're looking forward to 2025, which we may see more volatility as a result of the election and changing policies. So we're preparing for that and thinking through those type of issues right now.
If you had to describe the year in one word, again, it's not over as we sit here and talk about this in the Forbes BLK 50 list, but if you had to describe it in 1 year, what word would that be?
Well, it's been an ebullient year.
A brilliant year?
Ebullient year.
A billion year.
Ebullient.
Ebullient year. This is a new word.
Yeah, well, I think that, again, you've had a equity markets and the credit markets have done very, very well. And I think no one really anticipated. I think the stock market is doing as well as it has.
Yeah.
And so as a result of that, we've seen some excesses. We've seen a real attraction to the crypto markets. Those stocks have been absolutely gone parabolic this year. Some of them up 300, 400, 500% this year. So, that's sort of a new growth industry. We've seen a lot of convertibles issued in the crypto names. So it's been an extraordinary year in that regard, seeing these new industries take shape and take off. And, when we get into convertibles, you see that a lot of the companies that have issued convertibles have been growth companies of the future. If you go back in time, Amazon had convertibles and Microsoft had convertibles. So a lot of growth companies have issued convertibles at some point in time in their past, and now we see these growth companies of today issuing convertibles to optimize their balance sheets.
Yeah, well, we'll definitely get into all that, and again, how you use convertible bonds to build your own wealth. But when we talk about that, right, for somebody that didn't know you, how would you describe yourself?
Interesting. I think I'm thoughtful. We tend to be low key.
Very low key. It took me a while to find you.
Well, there you go. There we go. We try to demonstrate what we do by showing results, having a demonstrated track record. So that we speak with that.
Yeah. But you as a person though, thoughtful, right? Very low key. Why is that? Why? Because some people on Wall Street, as I'm finding, like they want to be out there, they want to have their name known. When you want to be real known, you just go buy a sports team, right? That's always a thing. But why low key?
This is who you are, I can't really say this is who I am,
Yeah. When you think about wealth, over the last few years, the term generational wealth has been tossed around a lot. But when you think about wealth, what's the definition for Tracey Maitland?
In terms of dollars, or just in terms of?
In terms of life. We talk about generational wealth. Again, this series is about building wealth through Wall Street. So when you hear the word wealth, what comes to mind for you?
Well, I think wealth is important, and obviously it's different amounts for different people, but having the ability to control your own destiny through economics, and I think that's really important, not just for myself, but for a family, for generations to come. So I think, we have to start thinking about generational wealth, creating companies and businesses that can sustain themselves in perpetuity, and so that's really what we're talking about.
Yeah. Me and you first had the phone conversation again as we dive into your career, right? But before we do that, we have to hit reset. A lot of people may not know what convertible bonds are.
Sure.
And me and you were talking about it. I said, it's like a CD, right?
Not surprised at all.
But our Forbes, we profiled you in about 2021.
Okay.
And the definition we said, and I quote, like a bond, Convertibles pay coupons, get repaid in full at maturity, typically 5 to 7 years. If a company issuing convertible soars, right, an investor like yourself,
Yep.
you have the option to convert that particular bond into stock at the company, right, when the bond's issued at a certain price. But if the economy goes down or something like that, then you still kind of don't lose because you can always cash that bond back in, get your original principal plus, interest on that, right? And you quote, they're like chameleons, right? One day they're green, the next day they're blue. This is how you were describing convertible bonds, right? In your own words in 2025. Is that definition still hold true?
100%. I mean, I discovered convertibles. I've had 2 jobs, Merrill Lynch and this. And when I was in training for a couple of years at Merrill Lynch, I discovered convertibles as an asset class. I said, wait a minute, I can get equity-like returns with a lot lower risk profile, a more bond-like risk profile. I said, why don't more people do that? And the reality is that most people don't know about it. It's an overlooked asset class, right? And if everybody did it, it wouldn't offer the risk-reward profile that it in fact does. So, I started it. We continue to, speak about convertibles as an asset class around the world. I think they're a little bit more popular in Europe and Switzerland. A lot of the private banks with high net worth individuals would use convertibles because those individuals were already wealthy. They didn't need to get rich, they want to stay rich. So safety of principal is important, and then current income might have been important for their foundations and what have you, and then equity upside potential. And so that asset class has been popular in Switzerland in particular for quite some time, and convertibles as an asset class from an institutional standpoint is even more popular than it is in the United States. So we thought that really focusing on the asset class in the United States and Canada, we could make a big difference. So that's why we really started the firm.
Yeah, I explained it to my 11-year-old daughter. I said, hey, this is how we're
get it?
She definitely got it. I said, hey,
fantastic.
5 to 7 years, if you had an opportunity to cash that coupon in for stock in the company, right? If that stock was low now and it's high then, says, what would you do? Well, I would cash it in. If not, what would you do? I would take the bond back. She got it like that. You sent me a book like 400 pages explaining it to me.
Did you read the whole thing yet?
I got through chapter 2. I'm still going though. I got how it marks it in your life. But as we dive into just that, right? Convertible bonds, again, to me, like a CD. If you had to walk into a 5th grade, 5th grade class and explain it to those students, right, how would you explain it to them?
I would say, just like you said, it's a bond that's convertible into stock at your option.
Yeah.
And if the stock goes up, that'll drive the price of the convertible bond higher, and you, the investor, will accept that higher price driven by the stock. If the stock goes down because the stock market went down or that sector's out of favor or what have you, and you buy a convertible bond that matures in 4 or 5 years, and you know it's credit worthy, and assuming you bought that bond at 100 or par, your downside risk is a positive rate of return. And that's an interesting way to be in the marketplace.
Yeah.
Being able to enjoy a majority of the upside of the underlying stock while only suffering a portion of the risk on the downside. It's called asymmetry in more technical terms.
Yeah.
Positive asymmetry to be exact. Capturing a majority upside and suffering only a portion of the risk on the downside.
Yeah.
And that's the benefit of convertibles as an asset class.
Like flipping a coin, right? Heads you win, tails you don't lose.
There you
Right?
go.
I mean, a perfect way, when I heard that phrase, I'm like, oh, this is phenomenal.
Yeah.
What's been the biggest surprise about running an asset management company on Wall Street for you?
Well, I think any company, it's you have a lot of people that you work with that you rely on, and making sure that you have the right people in place to focus on the important things, people that are passionately interested in your same vision. And I think that's always been the challenge, not just for this business, for any business, in my opinion.
Yeah. How about the biggest negative surprise? What's something that you found that maybe you weren't expecting all these years here, still it's a negative surprise for you?
Negative surprise is that, we're still telling the story of convertibles as an asset class. A lot of people don't know what it is, which is an opportunity. So it's a little surprising that, folks still don't fully understand and appreciate the asset class, but that's our job to help tell that story.
That's because you've been low key all these years, right?
Not low key.
When you look back on Wall Street, right, is there a challenge being black and navigating? Because from afar, it sounds scary. I remember being a little kid walking in the bookstore, even reading Forbes magazines, and you have dreams of being on Wall Street, but it's like, well, how do you get there? And then when you get there, what do you do? What challenges have you found, and how did you kind of overcome it?
Well, look, I've been fortunate. I learned about the asset class. I was passionate about it. It made a lot of sense. I started in New York, and then I went out to Michigan and called on companies out in Ohio, Kentucky, and Michigan. And most people weren't thinking about convertibles, so they kind of had to rely on what we were helping them to understand. So In that regard, I can't say that I had that challenge. We were able to take that institutional office in Detroit, Michigan, from being nowhere to being the second largest satellite office in the Merrill Lynch system. So if there were challenges, the challenges were more professional, that people didn't know what the asset class was. In terms of being black, those weren't obvious situations that I encountered. And maybe behind the scenes, folks may have had a problem or thought it was a challenge, but I think we were able to overcome those challenges with performance. And at the end of the day, Wall Street is about generating returns and performing. And I think we were able to do that, and I think that's what most people will focus on, the green, more so than anything else.
Absolutely, color's green. Take a step back even further, right? Because you started your career here in New York, but you also grew up here, right, in the Bronx. What was that like for you, growing up in the Bronx, New York?
Listen, I had a great childhood. I was fortunate. I grew up in the Bronx. My father was a surgeon who was well known, operated on Martin Luther King
Right
and
after
Miles
book
Davis.
signing.
Yeah. And so I had great exposure. Even though I grew up in the Bronx, spent a lot of time in Manhattan. And when I was a teenager, I finished high school in Manhattan and spent a lot of time living in Manhattan when I was in my last years in high school. But where we were in the Bronx was a nice neighborhood. It wasn't Fort Apache, to be honest with you. You have the Northeast Bronx and the Northwest Bronx, and those are two areas that aren't as challenged as the rest of the Bronx, is what I would say.
Yeah. As you're navigating your way through life, right, in high school, walking around Manhattan, catching the subway, who's your favorite rapper at this point? What's your soundtrack to life?
My soundtrack to life? Well, a lot of them are good friends of mine. Run DMC is a good friend, or Jay-Z. So these are, relationships and friends that I have. So
you're listening to Run DMC at this age?
Well, he's a friend. I was just with him this past weekend.
Yeah.
Yeah.
I like that too. Right? That's a great way to tell me how much important you are.
He's a positive influence. Look at music today.
Yeah.
A lot of it's become very dark. I'm not sure why it's so dark, right? And so, I'd love to see young people get back into the light, positive, right? It's not about, negativity. And so I think that Run and rappers like Run always project a positive attitude, and he's a reverend, as you know. So I think that's what I would say.
Yeah, and you're coming from, and leaving New York, you go to Columbia, right? You're majoring in finance. At this time,
majoring in economics.
Economics.
Yeah.
See, in economics.
Difference.
Yes, it is. Correct that. At this time, are you kind of knowing that Wall Street is your future?
I was fortunate, and I would say this to any young people looking at this. I was fortunate to discover Wall Street at an early age, right? I was probably a freshman in college, discovered Wall Street. I said, hey, this is really interesting. So I was able to develop this interest and passion very early on. So the earlier that folks could stumble on their passion, the earlier on they could get onto it and really study it and understand it and appreciate it. So, and that's why you started today. Why don't I get up with an alarm clock? Because I'm ready to go, right? Because I've always loved what I do. And so to the degree that you or folks that are watching this interview can discover or find their passion early on, the better off they're going to be. And I think if they are really like what they do, they're going to do it really well, and they're going to excel. And I think that's really super important.
Yeah. And coming out of college again, you basically went through your history a little bit ago, but fast forward to that time at Merrill Lynch, right, in the 1980s. When you're in Wall Street, everything is happening. Like, first of all, what was it like in the 80s looking around on Wall Street? Like, what was that like? What was that atmosphere? And is it anything compares to today?
No, it's very different. Technology has really changed the way that transactions happen. Relationships were less about talking over Bloomberg or computers. It was direct one-on-one relationships, which I think was helpful. So it's very different in that regard, and that technology has changed the way that transactions occurred. It changed the nature of relationships are changed. It's much more transactional today than it was before. So there's pros and cons with technology. The technologies that you get a lot of information quickly and able to source through it quicker, and AI is going to help that even more. But then that's going to be less relationship focus, which I think is not great, because it's great to understand what people think and why they think it and how they think it. So I think that's the big difference. The nature of the relationship on Wall Street has changed dramatically.
Do we need to get back to that though? I mean, listen, virtual is great. I love virtual. We were talking on virtual before, but do we need to get back to that more intimate one-on-one relationship building in order for us to evolve?
I think that's important. In our company, we've encouraged people to come back from work from home because I think collaboration is important. You know, walking down the hall, you might think about something that, hey, I meant to talk to you about this, by the way. And those type of things, a lot of things happen that you don't plan for, that are ad hoc. In Wall Street, the great thing about Wall Street and the economy is every day is different. And that's why I like it so much. Every day is a different challenge. It's politics, geopolitical issues, it's the economy, it's specific issues with individual companies on a micro level. All those factors go into how you think about what investments you're going to make and why, and how you communicate that with your investors. So that's all very important. So I think the collaboration is really important. That dialogue with your colleagues and that collaboration is important. So yeah, I think it makes a big difference.
Yeah, I'm getting to right fast, you know, in a minute, building the wealth and how you did it step by step. But before that, you know, Merrill Lynch, again, you spent a lot of time there mastering convertible bonds before you start your own firm in 1995, right? But all those years roaming through Merrill Lynch, going around the country, going around the world, right?
Yeah.
What's the biggest piece of investment advice you picked up through all those years at Merrill Lynch you still use today?
Well, you know, I think, you know, I don't know if I'd call it the biggest piece of investment advice, but it's really understanding fundamentally why you're making this investment and believing in it and doing the work, the fundamental work on it. So if you have that conviction, irrespective of what happens in the short term, you can stay with it. You don't want to get chased out of investment because of one bad headline, and maybe that headline's interpreted wrong. So really understanding why you're making that investment, that hasn't changed, right? Fundamentals haven't changed. And the great thing, when I was at Merrill Lynch, I started in Detroit, Michigan, started in New York, then they sent me out to Detroit, Michigan, was there for a few years, and I came back to New York. And when I came back to New York, I had the benefit of working with investors around the world, from the West Coast to the Middle East to Europe, and understanding how all those investors looked at the investment world was really important in me shaping the dynamics of how I organize Advent Capital Management today. So all that input and information was really important in that regard. So I would say that not much has changed in us really focusing on the fundamentals, more so than anything else.
Yeah, I'm reading Warren Buffett's book, and you know, it was a time early in his life, you know, as he's getting into Wall Street, he stopped listening to people. He's just saying, listen, if I kept $10,000 and I would have listened to this person, I'd have still had 10 grand, right? Do you listen to people as much, or do you, when you're making investments, is it just how you look at it?
No, we seek information from folks that we value the input and information. Absolutely. By the way, Warren Buffett was a big investor in convertible bonds as well. So
yeah.
he used to use
and Howard Marks. Yes.
And Howard Marks as well.
Yeah,
so,
absolutely.
And Warren Buffett even issued a convertible bond at one time for Berkshire Hathaway.
Yeah.
So a lot of people don't know that. So a lot of the stakes that he took back in those days were via convertible bonds.
Yeah. Well, listen, let's dive into that. Perfect segue, because, you know, people watching this video, they're going to know, well, I want to know how to build wealth through convertible bonds.
Yeah.
I'm going to start at $1,000 because, you know, I feel like that's an average amount, you know, somebody can have $1,000. All these people walking around New York. You have $1,000, and, you know, Tracey Maitland is sitting up here, and you're, you know, build your wealth through convertible bonds. What do you do with that $1,000 and take it into the convertible bond market so you can start to make some money?
Well, you can buy a convertible bond in a company that you know and believe in, and you wouldn't, if you buy that convertible bond at $1,000 or par, and it probably going to yield.
Explain par for those people.
Par is $1,000, 100 cents on the dollar, right? And so, and typically convertibles yield around 3%, right? And so you're giving up a little bit of yield to a straight corporate bond. So a straight corporate bond might yield 4 or 5%, that's investment grade, right? So you're giving up a little bit of yield, but you're given the opportunity to earn a lot more if the stock goes up. And so to me, the way to build wealth is in the equity markets, right? Over time, equities way outperform the fixed income markets. And typically you've seen equities return 7 to 10% a year over long periods of time, right? Which is a great return. You have the S&P this year up over 25%, right? So you have the opportunity to really benefit over time investing in equities or convertible bonds that give you equity-like returns with a lot less risk. So let's say you invest in the stock, but the market goes down for whatever reason. Maybe there's a war, maybe who knows what happened. Tariffs are putting a big uncertainty on what's going to happen in the economy in 2025 and 2026. But if you buy the convertible bond in a good company, you know that your downside risk is going to be that 3 or 4% yield that you're getting. And assuming, again, you buy that bond at 100 cents or thereabouts, you're going to get most of your principal back, assuming that company's a good credit.
Yeah.
As the stock goes up, you're going to enjoy a majority of the stock on the upside. So you can either buy that convertible bond, or you can buy a fund that invests in many convertible bonds. So those are one of the two ways that you can participate in the convertible bond market.
Maybe $1,000, maybe not enough money, right? How much would you advise somebody to get into?
I wouldn't say that. So if you have $1,000, you can invest in a convertible mutual fund. You're going to get exposure to a diversified portfolio.
Right.
And so, yeah, you can do it with $1,000. You can do it with $500.
Yeah.
Right?
And you yourself, Advent Capital Management, you guys have convertible bonds that are available in the stock market and through a fund.
Yeah, we have what you call a closed-end fund.
Right.
I'm not sure how much I could talk about on here, but it's a closed-end fund, which is publicly traded on the New York Stock Exchange that invest primarily in convertible bonds. But there's also mutual funds that invest in convertible bonds that a lot of the major mutual fund complexes will give you that opportunity to do that as well.
So someone can go and use Advent Capital to, maybe get into the convertible bond market through buying through the closed-end fund.
Yes, they can.
All right. Yes. Looking at it from a company perspective, right? Let's say someone wanted to maybe start an asset management company on Wall Street. How would one go about doing that to maybe build their wealth that way?
Well, I think you have to have a track record, right? So, believe it or not,
A track record in finance or economics?
Well,
there's a difference.
I think either or is fine. I've come across kids in high school that are already starting to look at the market, already looking at trading options and stocks. When you develop that passion and you discover it early on, you're never too early to start doing it. So I remember the high school I went at, some of those kids were already reading the Wall Street Journal, right? So that makes a difference. So I think that any age is fine to start looking at investments in Wall Street, and the more you look at it, the more you understand, the better you understand it, and become an expert at it. So that's what I would say.
For those people who may fear, and there's fear of success, and I think there's fear of failure, and there's that fear of success thing. But when you're looking at Wall Street, again, it can be intimidating. If you're a kid, maybe growing up in an underserved community, maybe thinking of Wall Street as a future, how do you kind of continue to maybe fuel that passion and not allow them to break it? Because, again, getting to Wall Street is very hard.
Well, look, let me just say this, and I know it's very controversial to talk about affirmative action and DEI. And what I would say is that if you're a company, you want to have as wide of candidate pool as possible. And I think that affirmative action and DEI, and I'm not saying hire someone because they're incompetent, but you want to give as many people as possible the opportunity to compete for that job at XYZ company.
Yeah.
And very often the establishment, a lot of kids on Wall Street get jobs because their parents work on Wall Street or they know somebody, and so they have that connectivity, right? And so, and they benefit from legacy or nepotism. And so what I would say is that affirmative action should be designed to give everyone full and fair consideration to compete for that job. And so when you ask about that kid from an underserved neighborhood, it's really hard for him to break in because his father or his cousin is not working at a Wall Street firm. And so I think it behooves that companies and the nation to encourage the best and the brightest to rise to the top. But they can only do that if they are aware of these type of opportunities. And I think that it'd be great for companies to continue to at least have that dialogue to encourage people to come in. It doesn't have to be Wall Street, it could be working in marketing at a major consumer products company. But that awareness is really, really important, and I think it's good for the company, and I think it's good for the nation. So if we want to encourage the best and the brightest, I think those programs are important to help people understand that there are internships available, to understand and appreciate how a company operates, what they do, so on and so forth. So I think that's the only good thing to happen. And once that kid understands and develops and goes back to the neighborhood and shares with other kids, hey, here's an opportunity. And those kids are going to work super hard to get that opportunity. So I think that's, I don't want this country to cut its nose off to spite its face, and understand that there's a value in diversity of thought, and that can come from anywhere.
Yeah. When you think of a whole, looking at your career as a whole, and still years to go, I'm sure, but how would you sum it up in one word so far as we enter 2025?
One word, that's kind of a tough one, Jabari. I don't know if I have one word. I enjoy what I do. Yeah. We're revs up to go every day. Every day is different. And so Wall Street's the type of thing that you can do indefinitely, because as long as your mind is operating properly, Some of the guys, another person in my book that wrote a forward for us was Mario Gabelli. Mario is been doing it for a long time, and he's a lot older than a lot of people. He's got more energy than some 40 and 50 year olds that I know. So the great thing about Wall Street, as long as your mind works well and you're passionate about what you're doing, you can do it for a long period of time.
Yeah. Talk to that parent, right, who may have, well, I have an 11-year-old, so I go for maybe a 5-6-year-old, right? And you got to start thinking, college is very expensive, right? And I can only imagine it's going to continue to go up. And it may not be the route, but for that parent trying to plan for the financial future of their kid, right, and they have a 5-6-year-old, what would you tell them, and how much would you tell them to start putting in, maybe looking at convertible bonds?
Well, I think, they'd have to determine, I can't tell them how much to put, they have to determine what they're comfortable with, but certainly convertible bonds is a way that they can allocate to, and over time it should do well, and they should feel better.
How much time, like how many years are we talking before you start to really see that investment pay off? Because it's not an overnight process.
Well, if you saw it this year, convertible index is up over 15% in 1 year, so, so it could make a difference. And the power of compounding returns over time is very, very powerful. So if you have a kid, you just had a kid and they're 1 year old and they're going to college when they're 17, 17 years of compounding whatever you can invest is very, very powerful. So the sooner you start, the better off you'll be. And convertibles is a way to know that you're not going to lose a lot of your principal over time.
Yeah, we wrap up here, man. You look back and you look over around the world, right? Geopolitics, I love it as much as the next person. Again, we were talking off camera, convertible bonds, Chinese companies tapping into the convertible bond market. Taiwan and China combined issued a record $18.8 billion of convertible and interchangeable bonds in 2024. That's up from a previous record of $18.7 billion in 2021, as according to Citigroup data. When you look around the world and you see, again, other countries going all in on convertible bonds, what are you looking at? What are you seeing?
Well, look, we're in a global economy, right?
So how long is it going to stay that way?
Well, I think we're going to find a way. It has to stay that way for the good of the entire world. And when you go buy a car, usually all the car dealers are in the same neighborhood. You got Toyota next to GM next to Ford, right? So we're in a global economy. And so I think it's important to understand and appreciate that that we continue to have productive trade relationships with around the world. Just like you have a global economy, you have a global capital markets. And when you think about some of the large Chinese companies that have issued convertibles, like Alibaba did a $5 billion convertible issue in the United States this year. That's a very profitable company. The market cap in that company is huge. And so, and they're forced to be reckoned with. They're sort of the Amazon in China. And, there's more Chinese people than there are Americans, right?
Billion.
So we have to understand and appreciate that. So, Alibaba, JD.com, there's a lot of those major Chinese companies that issue convertibles. And again, it's really only the major multinational Chinese conglomerates that could really issue convertibles in the United States. So that's what I'd say.
New administration coming in.
And by the way, you should know also, at one point in time, Japan was the largest convertible market in the world in the 90s. So you remember Japan was a roaring economy at one point in time.
Can that start to come back, though? Because as you see the U.S. shift away from China, Japan all of a sudden is the new partner that, a lot of we're outsourcing a lot.
Absolutely. There's a lot of Japanese investors as well in the convertible marketplace. Again, they used to be the largest issuer of convertibles at one point in time. That's going back to the 90s. And then I told you that in Europe, a lot of the private banks in Europe are big investors in convertibles. The other thing I'll tell you is that insurance companies are big investors in convertibles. Their investments are regulated by the NAIC, National Association of Insurance Commissioners, on what they can buy and how they buy it and how they have to reserve for it. So if an insurance company invests in a stock, they have to reserve up to 30 cents on a dollar. I just told you that convertibles over a long period of time have equity-like returns with less risk. And if they buy investment-grade convertibles, they don't have to reserve 1 to 3 cents on a dollar. And if they're not investment-grade, 4 to 8 cents on a dollar. So convertibles are the most capital-efficient, risk-seeking investment that an insurance company can make. So we see a lot of insurance companies, not just in the United States, but also around the world, in investing in convertibles. And some of our bigger clients are in Europe are European insurance companies. So it's a product that, again, that's global in nature, has global opportunity. and we're excited to tell a story on a global basis, and that's what we're doing.
But do your research, though. You got to do your research in convertible bonds. Got to do your research.
It's an overlooked asset class.
Yeah.
And what I would say that if everybody invested in convertibles, they probably wouldn't have the risk-reward profile that they in fact do. So, when you make investments like Warren Buffett, he studies things, he tries to find things that everyone's not doing and get into it before everybody else gets into it.
The cheap stock philosophy.
Exactly. So if you do your homework and understand convertibles as an asset class, understand what the historical returns are and what the historical risk profile has been, you begin to understand and appreciate why convertibles as an asset class makes a lot of sense, particularly in what could be a challenging investment climate, because a lot of rules and regulations are about to change, particularly with tariffs and so on and so forth. So that's going to make a big difference.
Well, I was ready to ask you that. Right, again, it's wrapping up. A new administration coming in. What was your first order of business when a new presidential election after it happens? What's your first order of business as a president of a company, and what advice do you have for the investors over the next 4 years? How do you navigate?
Well, I think you have to begin to understand what are some of the policies that they talked about implementing, and understand what the ramifications are of those policies, and are certain companies or industries that are going to benefit, or are there certain industries from a macro level that are not going to benefit. So we're doing that, we understand that, and we're allocating capital as a result of what our findings are. So I would encourage every investor to understand, hey, who is it that could be hurt the most by tariffs if in fact that happens, and who could benefit the most if in fact it happens, and that's sort of a macro tailwind or headwind, and so it's important to do that work and understand.
Yeah, you got some money coming into 2025. Maybe you sold your house finally and you cashed out. You got some money. What's one sector to avoid over the next 5 years as we move into 2030?
I don't know if I would say, we really are more of a bottom-up type firm, so we don't just say, hey, you should just avoid this sector. I think we look at each individual name and judge it on its own merit. You might have a slow growth sector.
What's a slow growth sector that maybe somebody should really study before getting in?
But even though it's slow growth, there's an opportunity, because the barriers, the people really pouring into that sector, it's going to be less competition because it's slow growth.
Right.
So that means a company that really is in that sector could really thrive because there's not that much competition, because it's a slow growth industry. So I wouldn't just ignore a slow growth industry, because there might be a company that's benefited because there's not that much competition, because everybody's focused on the hyper growth industry.
Yeah, well, is there one slow growth industry that you maybe want to pay attention to because everybody's looking left? And
well,
look right?
I don't want to say, you look at utilities this year. Utilities did really well this year, right? I mean, it's some of the best performing parts of the marketplace.
I'm looking at Exelon.
Who would have thought that, right? And no one thinks of utilities as a high growth industry, but they did super well this year. So that's what I'm saying. You have to look at each individual investment and judge it on its own merit.
Yes, absolutely. Gen AI, that's one sector that a lot of people are paying close attention to. When you hear that phrase, what's the first thing that comes to mind, and how will it impact your sector?
Well, I think AI is not just our sector, it's investments, it's everything. There's a big article this weekend on how the oil companies are using AI to find oil and what's the most efficient way to do that. So I think you have to look at AI and how that's going to be adopted across all industries, right? So, and even in investments, we're looking on how we can use AI to be more efficient and more effective. So,
because I'm sure there'll be some companies within convertible bonds that's going to be looking to raise money so they can expand into the AI.
Well, there's lots of different ways to do that. You've seen software companies that issue convertibles that are focused on AI. You have all types of companies that could benefit. Dell may sell more computers because of AI. So you have to. It's not just one company. There is a plethora of companies that are going to benefit because of AI adoption. Even data centers and the companies that are going to provide the power to fund those data centers. Those stocks have done super well. So you got to look at the entire ecosystem of AI. It's just not the company producing that one product. It's the data centers, it's the electricity to power those data centers, which a lot of them are very power hungry to satisfy. So who's going to provide all the power for these data centers that use a lot of energy? So all
the supply chain within this Gen AI, I tell people that's where you're supposed to look, because everybody's looking at the big company, but the NVIDIAs of the world, but you're going to need something to power all those, and data centers, as you said, very key to that.
100%,
Your best, I usually say management, but for this conversation, your best wealth book. What's a book that has really motivated you from a wealth standpoint that you would always tell someone, hey, go read it?
I tell them to read our book, Convertible Securities.
Yeah, but I know, but I'm reading it now. I'm trying to bring it down to conversation.
So after you read that, you let me know.
Well, is there anything outside of your book then?
Look, a lot of books I read to help understand the market are probably, for Bozy fixed income. There's a lot of books that, I think you should just find any book that you're comfortable reading that can educate you about the stock market. I would encourage you to read current periodicals like Forbes or Barron's, just to keep you current on the capital markets. You're not going to do well with it unless you're intellectually curious about it. So that's what I would say, not just the books, but I'd also look at current events that affect the market, tie those things together, and I think you're going to be more excited about investing in the market.
Yeah, I never thought I would be so excited about convertible bonds.
No, see, I'm glad you are. Well, we're making progress here.
I'm telling you, man. Your 3 traits to building wealth. 3 traits.
Well, I think that one, what I just mentioned, you need to be intellectually curious about the capital markets. You got to be able to perform a rigorous fundamental research about what you think makes sense. And then you have to be able to determine what is the right price to buy that asset. So those are some of the key things that we look at.
Yeah. Finally, man, I always close these conversations with Good to Great, Jim Collins, my favorite business book.
Yep.
What's the difference in Tracey Maitland's eyes between a good investor and a great one?
That's interesting. Look, we talked about being intellectually curious. It's not a 9-to-5 thing. You got to be driven. And then there's some people just have an innate ability to generate returns in the marketplace. And not everyone can do that. It's like trying to teach somebody to dance, right? So that's part of it. That's a talent, right? Everyone's not talented like that. So I think, but to develop that talent, I think happens from the intellectual curiosity in the capital markets. So I think it's all connected. So hopefully that answers your question.
Yeah, most definitely. Building wealth through Wall Street, the convertible bond style, right? So much more. Tracey Maitland, thank you so much for the time. Congratulations also on your success. That's one thing that I failed to mention throughout this, because again, according to us, you're very successful, right? Very successful.
Well, we do what we can.
Yeah.
And listen, we're really pleased that we've been around. We're going to celebrate our 30th anniversary next year. We manage billions and billions of dollars on behalf of our investors, institutional investors around the world, but also individual investors in our mutual fund, which is AVK ticker symbol AVK on the New York Stock Exchange. So we're very pleased to have these investors. We're excited about it. We're excited to tell the story on a global basis. We actually grew more in Europe this year than we did even in the United States. Yeah. So we put offices in Germany, and we have offices in London. So it's really a global footprint that we have. We're going to be looking at doing things in Asia and Australia as well. So we're excited about the future, convertibles as an asset class.
Excited to have you back and continue to talk more business. I definitely appreciate it.
Great.
Here
thank
at
you
the
for having
NASDAQ.
me.
No, thank you. Appreciate the time.
Yeah.
Here at the NASDAQ market site, Forbes BLK 50, power, wealth, impact, building wealth through Wall Street.